International Business Machines Corporation, stock ticker IBM, is currently trading at $126.42 per share. Over the past year, they're down 9.8%, and year to date, they have definitely been on the decline, down almost 11%. Now, the good news about them trading at this price is this gives them a starting dividend yield of 5.22%, so a very nice starting dividend yield. And the company also recently announced their Q1 earnings report, so we do need to run through that. You can see right here they had earnings per share of $1.36, which was a beat of their expectations of $1.26 per share. Revenue was $14.25 billion, which came in slightly below the expected $14.35 billion. And then one more thing that I do want to point out is they also gave us some guidance for their expected free cash flow for the year, which is going to be $10.5 billion. That's going to help us build out our discounted cash flow analysis a little bit later in the video. So a lot of things to point out about the company. Like I said, dividend yield of 5.22%, but this is also a company that's been increasing dividends for 29 consecutive years. This is actually the only company that operates within the information technology sector that is a Dividend Aristocrat, so definitely very interesting. They've been doing this for a while now. And as I was going through this company, I was looking at some analyst expectations, and I thought it was really interesting. We can see we have it high over the next year that they could potentially trade at $162 per share, a low of $110, but a median price target over the next year of $143.50 according to CNN Business. So it looks like they do think they're a little bit undervalued. So in this video, we're going to be jumping into my stock valuation spreadsheet to see if we can find the intrinsic value of IBM, and we'll be going through a few different valuation models like we always do. If you'd like to be able to download this spreadsheet, you can head over to my Patreon page at the link in the description. But let's go ahead and come up here and we will plug in the stock ticker IBM and hit enter, and you can see all of this data is going to automatically load in. And like we already mentioned, they have been on decline over the past few months. Now, if we come over here, like I said, dividend yield 5.22%, dividend payout $6.60. Now, the payout ratio here is showing around 362%. So obviously a major red flag. So we do need to dig into that a little bit more. So let's go ahead and jump back over to Seeking Alpha, click on dividends. We'll go to dividend safety. And by the way, Seeking Alpha is still running their 58% off sale at my link in the description if you're interested in using this. And if we come here, you can see the dividend payout ratio for Seeking Alpha showing pretty close to that number we just saw, 336%. But a lot of the times, this number can be manipulated due to the timing of when they recognize things such as revenue. Once I started to dig into this a little bit more, this dividend is a little bit more sustainable than I originally thought. You can see the dividend payout ratio, non-generally accepted accounting principles, sitting at around 72.69%. And the cash flow payout ratio, which I think is extremely important to look at as well, sitting at around 55%. So dividend is a lot safer than you originally would think when looking at this dividend payout ratio right here, but it is still a little bit high. I mean, 72% and 55%, both a little bit higher than you typically want to see. So we might not be seeing a lot of dividend growth from this company in the future. Now, moving forward, you can see analyst target price around $145, $146 per share. Institutional ownership actually kind of low, sitting at around 58.5%, and a beta of just 0.85%. So you might not see a whole lot of volatility with this stock. Now let's go ahead and move forward, and we'll jump into our valuations. And the first we'll look at is Graham's valuation. And here's the formula he lays out for us to calculate intrinsic value. So we need to plug in our earnings per share, we need to plug in our growth rate projection, and then we need to plug in the current yield on AAA corporate bonds. And at the time of this video, that is sitting at around 4.3. So when I plug all of those metrics in, you can see we come to an intrinsic value of around $135.81 per share, pretty close to that current trading price, but also just a little bit higher, closer to analyst price projections. Now moving forward, let's look at our discounted cash flow analysis. And so what we do here is we need to project a growth rate to the future free cash flows of the company. To do so, I plug in some historical free cash flow projections from this company so we can see their year-over-year growth. And it looks like over the past years right here, they saw some pretty solid free cash flow growth, but it has declined a little bit over the past couple of years. Now, like we saw just a moment ago, the company has also guided to $10.5 billion in free cash flow for the fiscal year. So that's going to help us with our guidance. So you can see for the year 2022, I am actually projecting $10.5 billion in free cash flow. And moving forward from there, I'm projecting a free cash flow growth rate of 3.5%. So not very high, but I think 3.5% will be sustainable for this company. I also applied that growth rate to the terminal value, which is the sum of the future free cash flows past the year 2030. I then found the present value of those future free cash flows and added them together, added the company's cash and cash equivalents, and subtracted out their total debt to get their equity value. Once I had that, I divided by shares outstanding and came to a discounted cash flow price per share of $147.10, pretty close again to analyst projections as well. Now moving forward, let's look at our multiples valuation. And basically what we're doing is we're seeing how the market is valuing companies that are similar in structure using a price to earnings multiple. So you can see our comparable companies here. And here's a quick little tip. If you're not sure about comparable companies, a good place to go is on Seeking Alpha. You can come over here and click on peers, and you can quickly see some comparisons for IBM and see how it matches up with a lot of different metrics. So cool little tip there if you're interested in that. But here you can see the average price to earnings for these companies is sitting at around 15.6. We multiply that by IBM's earnings per share, we come to an intrinsic value of about $148.19. So again, you can see average price to earnings for the comparables 15.6. If we jump over to our stock screener, we can see price to earnings for IBM 13.05. So some may argue the company is a little bit undervalued by the market. Now, the last valuation we do want to look at is our dividend discount model. And basically what it does is it values a company based on how much they pay out in dividends and how much that dividend is increasing. So I plugged in the quarterly dividend payouts right here, and we can see their most recent dividend payout was $1.65. Now, the next quarter will probably be a little bit higher. They are due for a dividend hike, but I don't expect it to be very high because you can see the dividend growth has started to slow quite a bit over the last few years. They have an average growth rate of around 2.43%. So moving forward, I'm projecting a dividend growth rate of 2%, discount rate of 8.5%, and that gives us a dividend discount model price per share of $103.57. So when we jump over to our output tab, we can see our four valuations. We have grams at 135, multiples at 148, discounted cash flow 147, and dividend discount model at $103.57. So when we plug all these in, we come to an intrinsic value of $133.67, a little bit higher than that current trading price for this company. It's a difference of a little over 5%. But let's say we wanted to apply a 10% margin of safety. Based upon that, our acceptable buy price for this company is around $120.30, so it's not quite in that buy range. Now, like we've seen throughout this valuation, there's not a lot of growth projected for the company as far as free cash flow or dividend growth, but this company does have a nice starting dividend yield, definitely something to take note of, sitting at around 5.22%, and I do think the dividend is a little bit safer than that initial glance at the payout ratio would show you. But again, if you're looking for long-term dividend growth, this is probably not the best investment option for you, but if you are looking for a decent starting dividend yield and you want to start receiving higher dividends now, maybe this is a company to look in. It's not that much undervalued, but it would appear they're slightly undervalued. So there you go. There is an analysis on International Business Machines Corporation, IBM. If you'd like to be able to download this spreadsheet, you can head over to my Patreon page at the link in the description. So with that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.